the bull run's over. This is a dead cat. Well, no. Listen, if the carry trade, if Japan is going to go from 20% chance to raise rates to 80%, and it's going to impact the carry trade, Bitcoin is going to start screaming first because it is the liquidity smoke alarm. There will be pain. Undoubtedly, there has to be pain. The question is how much, and the question is to who. And so my expectation is, well, first of all, we'll see how the next week plays out. If Bitcoin remains this low and liquidity is not injected and the Bank of Japan does not revert on the expected rate hike and nothing gets aggressive on the US side, the stock market will melt down and will fall as well. All risk. Everything got murdered, guys. So maybe Bitcoin finds a low mid-December.
Forget everything you've heard about the recent drawdown we just experienced in the Bitcoin market. Jack Mallers is about to break down exactly what's really happening behind the scenes. He'll share what he sees coming next in December and tell us whether the cycle is truly over or if we are still on the way to reach his prediction of $250,000 to $1 million this cycle. Let's dive in and hear what the CEO of Strike and 21 Capital has to say about these critical topics.
So this tweet from Arthur, BTC dumped because the Bank of Japan put December rate hike in play. USD JPY 155 to 160 makes the Bank of Japan hawkish. What is he talking about, and what are you guys looking at? What we're looking at is, in white, BTC USD, so the price of Bitcoin. And you can see it stagnating sideways, a little bit of up chop, a little bit of down chop, and then it looks like it got shot and fell off a cliff. What are we looking at in orange, weirdly? That is the dollar-yen currency rate. Weirdly, guys, it shows very similar pattern. A little chop, but mostly sideways, and then it looks like it got shot and fell off a cliff at the same exact second. What's going on? What is this relationship? This from Zero Hedge. Central banks have completely messed up market messaging. First, the Federal Reserve's schizophrenic communications sent December rate cut odds from 80%, then to 30%, then 100%. December rate cuts for the Fed, for the US dollar, were guaranteed, and then they backed off it and Bitcoin freaked out, and now they're back to guaranteed. And now the Bank of Japan just sent December rate hike odds to 80%, down from 20% only 10 days ago. So the cost of capital, there's really two ways to think about liquidity globally, macroeconomics, fiat. There is one, what is the price of money? And two, what is the supply of said money? Now, traditionally, I'm more interested in the latter, in the supply of said money. Why am I interested in that? Well, we've seen Bitcoin go from 16K to 126K while rates were at 4+% in the United States. And that was on the back of the fastest rate hike ever. The reason Bitcoin was able to rally so much is because liquidity came from the US Treasury. This idea of fiscal dominance. Global sovereigns, and specifically the United States, is so indebted that it has to find liquidity at all costs. It can't solely rely on the Fed anymore. You get this idea of fiscal dominance when the US government is really driving policy for money. So to me, the quantity of money has been more important and will continue to be more important. But the other very important variable is the price of said money. And the price of said money is set by central banks, and that is known as the rate. All of a sudden, Japan went from very likely not to hike rates to very, very likely to hike rates overnight. Now, why is Japan hiking rates relevant to Bitcoin at all? Let me tell you. So I read this tweet. This chart is single-handedly bringing the entire crypto market down. Japan 10-year bond yield is now at its highest level since 2008. Bank of Japan is about to do a rate hike at the next meeting, which will make things worse. Cheap borrowing will be over, and people will sell their assets to repay the debt. Crypto is the most liquid asset, so it's dumping the most. I think we can soon see the impact in other risk assets as well. The idea is Japan has been the cheapest capital to borrow in the world because rates have been set literally at zero. Sometimes they've been negative, where you get paid to borrow money. And even as they have hiked rates as of recent, the rates are still unbelievably small. Why is that relevant? Well, what the carry trade is you source capital, you borrow money in Japanese markets, in yen, and you invest that money into risk that performs and out returns the rate. So, common thing to do is to borrow yen and buy the Mag 7, buy the S&P 500, Bitcoin. You're taking free money. Think about what Michael Saylor has done. And so there was what's known as a carry trade. The carry trade is very simply borrow where the capital is cheap. You know, when the US has interest rates at 4+%, that's not cheap. When the yen is at interest rates of 0 or negative, that's cheap. The yen has played a very critical part in global liquidity. Okay? The yen has supported risk assets very, very, very much so. Where if this trade starts to unwind because Japan has to raise rates, it will be very bad for assets, particularly risk assets. And so as I always say on this show, what does Bitcoin do a phenomenal job at? Telling us the truth. Bitcoin's unbelievable, the best in the world at being a free market that can be honest and that can tell us the truth. What is Bitcoin telling us? Global liquidity, no bueno. So I read the tweet. In July 2024, the Fed cut rates while the Bank of Japan raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. Good chance this happens again on December 10th. The Fed cuts and the Bank of Japan raises rates, So maybe Bitcoin finds a low mid-December. Now, the point of this is not to tell you guys Bitcoin's going to find a low in mid-December. I've said it once, I'll say it again. I have no fucking idea what Bitcoin's going to do in the short term. No idea. Nor do I think it's that important. If what Bitcoin's going to do over the next few weeks is that important to you, you should be very careful. You should probably get a little bit more humble and stack a little more sats. Understanding the indebted sovereigns, understanding how they're printing money, where they're printing money. Because the mainstream media is lying to us. Oh, Bitcoin's run. What do all the traders on Twitter like to say? This is a dead cat bounce. I don't even know what that means. This is a dead cat. Okay, well, listen, and people say, the bull runs over. This is a dead cat. See that cat on the ground? It's dead. Bull runs over. I say, okay, well, no, listen. If Japan is going to go from 20% chance to raise rates to 80%, and it's going to impact the carry trade, Bitcoin is going to start screaming first because it is the liquidity smoke alarm. It is the only free market. It is the truth source we have globally. That's what's happening. Make no mistake, I don't know anything. I'm allergic to cats. Literally, I am. You learn something new about me every single week. I am physically allergic to cats. I can't be around cats. So I know nothing about a dead cat bouncing. I know nothing about it. I know I take a lot of shit for it. I continue to say I think this cycle is 250K to $1 million. Sue me. And if I'm wrong, then yeah, we're looking at a dead cat that's bouncing or whatever, and the cycle's over.
Bitcoin is seeing a small bounce back today after a sharp drop over the last couple of days. The recent volatility was mostly triggered by a widespread pullback from risky investments, a trend that also hit many technology stocks. This cautious mood was intensified by whispers of potential policy shifts from central banks, which could reduce the easy availability of money in global finance. Many traders who were using borrowed funds were quickly forced to sell, contributing to the sudden drop. However, some technical indicators suggest that the selling might have been overdone, hinting at a potential short-term reversal, or at least a pause. The overall sentiment remains watchful, but Bitcoin is showing signs of stabilizing after the recent shakeup. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.